All right, well, good afternoon, good morning, good evening, wherever you are, whatever time zone. This is Scott Thompson here for another short video on our 2 green arrow sample plan that we're using in our Stock Investing for Beginners webcast. This one is going to be on setting the initial stop and how to adjust the stop along the way. As always, remind everyone the presentation today is for educational purposes, not a recommendation or endorsement of any particular strategy or stock that we look at today. All investing involves risk. We are using the paper money software platform, and there are some significant differences there. Be aware that the stop order is not guaranteed to get filled at or near the stop price. This activates a market order, so it could be filled significantly lower than what we're going to be talking about today. And then remember, all investing involves risk, including the loss of principal. So what I want to do first is start off with an example of a stock that we have a buy signal on, and then we get 2 red arrows and how that stop adjustment works. So this is on COF. You can see the green arrow on the MACD happened here actually on the 23rd. The stock was actually above a rising moving average, which is, if you remember, that buy signal. But the stock had some resistance there at about 204.48. And so some traders will wait for that stock to break out above that resistance area, even though the criteria may have been met there on the 23rd. We actually took this order on the 24th with 2 green arrows and a breakout. And on that particular day, the moving average was at 188.15. So 1% below that is the rule. And we put our initial stop there at 186.27. Then you can see the MACD went along, and we got a red arrow on the MACD here on the 14th, but the stock was still above the moving average. Now you can't really see the green arrows, but just realize that if the stock price is above that moving average, then we consider that a green arrow. So, we don't really have anything to do as far as stop adjustment goes all the way through this until the stock actually closed below the moving average, and that happened on the 7th of August. We had 2 red arrows. The low price that day is 206.87, and the rule is to place the stop 3% below the low price on that day. So 206.87 times 0.97 ends up being $200.66. Now, when you make that stop adjustment, one of the things that we like to do is go back and ask if that stop makes sense. And that just means is it below some of these recent lows. And you can see here was the lowest day in that little period. We had a low on the 1st of August at 203.63, and our stop at $200.66 would be below that. And so we would just take our existing stop, and this is a cool feature on Thinkorswim. I can left click on my existing stop order and just drag it up. And you can kind of watch that price, but I don't worry too much about that because it's hard to get it right on the right price. But when you let go of that, it'll bring up an order edit, and you can put in your $200.66. Oops. And then just make sure it's a stop order, make sure it's good till canceled. When you hit confirm and send, it'll give you a chance to review the order, and we just want to double check that it matches the number that we have. There's a little red line here that says no, the stop order is not guaranteed to fill at that execution price. Could be much lower than that. So you want to read that, you click send, and now your stop's been adjusted here right on the chart. So that's the first example of, getting a buy signal and then getting 2 red arrows and how to adjust the stop. The next one that's really interesting is as the stock trends forward, we have an example here of MS. Now MS, you can see we had a green arrow on the moving or MACD on the 24th. The stock actually went above the moving average way back here on the 2nd of May, but we just didn't really start the program until after the 9th of June here. And so this was really our first buy signal day. The moving average was rising. The stock had kind of broken a new high. And so on the 24th, we had 2 green arrow entry signal, and we got in there about 136.25. And the moving average value was at 123.88, so 1% below that would be 122.64. And you could draw a little red line. I like to do that on my charts. I like to draw a little circle when I go in there and make the purchase as well. So that's the buy signal. Then, you know, a few weeks later, we actually got a new buy signal. You can see we had a red arrow on the MACD back on the 9th of July over here, but the stock never fell below the moving average, so we don't adjust the stop until what? Well, until we get this new buy signal. So this day, the 30th, we got a new entry signal, and so the moving average value on that day was at 135.87, and so we would move our stop up to 134.51, and you would do that same process, just adjust your existing stop order. And I'm going to just right click on this, I'm going to duplicate that line, and then kind of draw it over here on that stop adjustment day just for a visual. And then I'm going to right click and edit it just to get it right where I want, right there at 134.51. And we'll do that on both ends, top, or, you know, begin and end point. And if those are the same, then that'll be a horizontal line. So we'll click OK, you know, and now I have a new stop order. I've reduced my risk on the trade. I've moved my stop up to 134.51, and, you know, essentially I've knocked off about $12 of risk there, right? Okay, now if we move forward, an interesting thing happened just a few days later. We got another new green buy signal right here, and this would cause us to again adjust our stop, and the rule is 1% below the low or the moving average. Now in this particular case, let's go forward just, you know, I have some notes here. On that day, the 12th, you can actually see the moving average was at 138.48. And so the rule says to put the stop at 137.09. That's what this little note over here is for. But when we're adjusting the stop, one thing that's important to understand is the stop's there to get us out when and if the trend changes. And so, you know, the rule maybe says put the stop at 137.09. But if I go look back here on the 1st of August, we had a low at 136.17. So does it make sense to put the stop at 137.09 when we had a low very close to that? And most investors would say, nah, let's not put it above the low of that last low here in the trend. Let's put it a little bit below that. And so if that last low was 136.17, if we go 1% below that low, we get 134.80, and that's where the new stop would go. And then interestingly enough, today, the 22nd of August, we have a green arrow on the MACD, or a new green arrow, and so we have another stop adjustment rule. The moving average today is at 140.93, and 1% below that would be a stop at 139.52. And again, so in this case, we would have adjusted our stop about 4 times, initial stop and then 3 adjustments. And what's kind of interesting, this stop now is above the original purchase price. So there's, you know, either no risk or very little risk on those first set of shares because now the stop price is above there. And of course, there's no guarantee we get stopped out at 139, could be significantly lower than that. But it's kind of a cool feeling to have your stop above that initial purchase price. So what I want to do is kind of finish this off by going over the actual rule, and just so it's there to review. So the initial stop again is set 1% below of the 50-period moving average on the day that you make that purchase. The stop adjustment is if you get a new buy signal while you're in the trade, move the stop up to 1% below the 50-period moving average. And if you get 2 red arrows, and that just means the stock is now closed below the moving average, then we take a look at the low price on that red arrow day and put the stop 3% below the low price there to give it a little wiggle room. And so those are the rules for this particular plan. Hopefully that's helpful for you. As you take a look, make sure you go through those orders and practice in your paper money. Thanks, everybody.